Hey everyone, how's it going? It is 6 o'clock, half an hour before the market opens on Thursday, April 25th. Hope you guys are having a terrific morning so far. Now, yesterday we were talking about how we have GDP coming up, we have earnings coming up, so that could create a lot of volatility in the market. However, this market is trading very, very technically right now, so we didn't necessarily care too much about those things. Those might change the timing of what we see in the market, but not the actual events of what we see in the market. So by now, we should have gotten the GDP. So we're going to take a look at how that has affected the markets. Let's take a look at the report first. GDP. And we are way, 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 way down. Consensus was 2.3. And the actual is 1.6, which is below even the entire consensus range. So that is not great news for the economy, obviously, not great news for the market normally. And probably if it's that extreme, you're probably going to get a negative reaction to the market. And that also means that it's very unlikely that the Fed is going to lower rates now anytime soon. If the GDP or if the economy is not doing well, then it cannot withstand a rate cut. So the this just makes it a lot less likely that we get rate cuts in for sure May, June, July. All of those should be down. Let's take a look at the Fed Watch tool. Okay, so we even have a possibility of a rate hike, which I don't think is going to happen. We'll just keep everything the same. We're now at 99.7 on May. Let's take a look at June. June is now down to 13.8% from 16.5%. July, and that may even go down further as we trade today. And because I don't know if this took into account bond prices yet. Bond market's been open for a couple hours, but I don't know if how frequently this is updated. And we are now, yeah, so here we are about 43, 44%. Now we're at 38.7%. So all of those probabilities are shifting lower, or it looks like we're not going to get a rate cut anytime soon. And at this point, with that type of GDP print, I personally have been saying 0 to 1, and now we just got a lot more likely that we're not going to even get 1. So we'll probably stick with that 0. Let's take a look at futures. Futures are down quite a bit, quite a bit. The S&P 500 looks like about 1.2%. So 120 basis points. NASDAQ over 150. That's going to be 160 basis points. So 1.6%. The Dow down also about roughly 1.2%, similar to the S&P 500. So these are definitively down. They're down hard, beyond random, beyond so normally I might give a little bit of wiggle room in terms of the percentage, what I would call random because of earnings season, but this is way, way, way beyond anything anyone could call random. This is very distinctly down. So let's see what that looks like on the intraday, because we want to see the reaction to the report. So we were down overnight already, and then this morning was just flat. And then once we got that report, a sharp movement downwards, and it's been selling off ever since in the pre-market. So that implies in the futures market, we are doing the same thing. So if I go over here and I look at the futures market and I look at the single 1 day, yeah, sharp movement downward, and it kept trading down. That should have some interesting implications for energies and gold. They should get bid up. Gold up, not a huge amount. That's interesting. Let's take a look at that. Would have thought we got a lot bigger reaction. Well, it's been trading up all night. in all morning. And so we did get a little bit of a spike and come back down, and then we traded back up. So not up too much. So gold not really reacting. Oh, let's just see. Sometimes there's a disconnect in timing. So let's see what GLD looks like over here. Okay, so yeah, we moved sharply upward at the beginning of the morning, so not necessarily related to the GDP. Okay, that's interesting. So muted reaction from gold, and then oil. Oil's not on this page. Energies. I don't have a good. Okay, well maybe we'll take a look. I'll just look at XLE, although I don't know if that's trading this early in the morning. Yeah, it's not reliable. That's crude oil, CL. Okay, so oil getting a little bit of a, it's like a little bit of crash, same direction as the stock market, which is interesting. Not what I would have expected. So energies tend to be a little bit more defensive. There may be something else going on within the energies markets or commodities markets specifically. So it's not necessarily just related to GDP over here. But let's take a look if that changes our picture at all. So we've been talking about over the last few days, or probably even the entire week, that we are going to come down. We'll probably find some support around this purple line or the MA90, bounce back up to the EMA8, EMA20, or MA50, and then come back down. So how does it look right now? We came pretty close to that EMA20 last night or yesterday afternoon, and then in the post-market session, I said, okay, that could be it. This is in the region of the EMA20. We could just pull back down from here, or we could chop sideways, or we could actually come up and touch the EMA20 and then come down. And it's looking like after that GDP report, we're coming straight down. Look at this pre-market, 499.5, which is below, or I guess we would call that in the region of this purple line. So in a single day or in a single overnight pre-market, not even overnight, pre-market session, because of that GDP report, we're all the way down to, we've basically undone 2.5 days of upward movement in that. And so we're gapping down. What we want to see is how well this 500 region gets defended at the open. Now, I shouldn't say at the open because there's a lot of retail trading at the open. There is probably going to be a lot of panic trading at the open. After an hour, at about 7:30 Pacific or so, we're going to see where we are. Did that panic trading bring us lower? And if it does, do we bounce back up to the 500 level? And then how well does it trade at that 500 level? Does it have trouble and just chop sideways? Does it get rejected and go back down? Or does it move upwards and get defended and retest and get defended? That'll be important information in how we are going to subsequently trade. So we're definitely going to be looking at this 500 level. The 505 level has been a very important level over the last couple of weeks as well. And then the 510 level, which is the one that we were looking to say, hey, are we going to actually go all the way up to the MA50? And right now, the likelihood looks pretty low. We're down. It's unlikely that we're going to get a green bar today. Or I'm sorry, not a green bar. We might get a green bar, but it's unlikely that we're going to close at or above yesterday's close. It would be an extreme move for us to gap down just say 1.5% ish or 1.2%, and then recover that 1.2% and then go up beyond that 1.2%. That would be a pretty amazing trading day. It would actually show a lot of bullish momentum, but it's just really unlikely to happen in this environment, especially since we have a bunch of earnings happening. We had Meta, that was the big one that we said would dictate the sentiment of the market today. They had positive earnings, but they are look where they're going to open. Look at this. That's a huge gap down. So basically, all this trading that happened since its previous earnings, we're basically going to completely undo it just because of this time's earnings. And the earnings were good. 9% surprise, 0.85% surprise. The earnings were solid on Meta, and we are going to gap way down and completely undo 3 months of trading. So this market, this particular earnings season has been all over the place. The earnings being reported terribly, like Tesla, and then it's shooting up 10, 12%. And Meta and what was the other one that did really well? I think it was Netflix. Was it Netflix? Yeah, Netflix doing very well, and then gapping way down. So earnings this particular season is really there's something else going on, as I said a couple of sessions ago. There's something else going on with the season. So we're just going to kind of not really pay too much attention to earnings, and we're going to look at things very technically. What we have now is sentiment. So Meta will affect the tech sectors and the communication sectors, and that will drag down on the markets. And then as a FANG stock, a lot of people look at a stock like Meta to decide how they're going to feel about the market. They're going to be, oh my gosh, Meta is gapping way down. I'm going to not feel good about this market. I'm going to freak out about this market. I'm going to be very afraid of this market. And then you've got the GDP effect, and that is actually fundamentally something that determines the markets. And so both fundamentally and sentimentally, you have these negative forces. So we already have a huge gap down. It's looking like at the open, and that negative sentiment is more likely to carry through than to reverse. There might be a few people who like, oh my gosh, we just got a bargain and we can pick up Meta or we can pick up all these other stocks at super cheap prices. And that is retail trader thinking. I know that you hear a lot from people who sell retail courses or make commentary on retail courses or on to retail traders that, oh, the bargain, you should buy low, sell high. So when prices are low, they're at a discount. And professionals don't think that way at all. We're not shopping. We are not shopping. We're not looking for a deal in the stock market. We are trading and we are investing. It's a completely different activity than shopping. You can't go into a stock or into a market, any financial market, and go into it with the mindset of a consumer. You're not a consumer. You're an investor. You cannot think the same way as a consumer. You can't go bargain hunting. You can't go shopping and say, I'm looking for a deal. There's no such thing in the market. There's the price that people are willing to transact at. It's an auction. I should say it that way. The market is an auction. It is not a shopping mall. When you see prices way down, it's not because they're on sale. Prices are way down because people are not willing to transact at any higher price. They're only willing to transact at a super low price. So that's why the price is down there. So it's a different mindset than a consumer. So don't go bargain shopping today. Please don't. Why? Because when we look at it technically, what have we been saying for 2 weeks now? We're going to come down, we're going to bounce up, and then what we're going to do? We're going to come down lower. We've been saying for at least a week and a half, maybe 2 weeks, that the highest probability event is to come back and have that 10% correction. So if you say, oh, Meta, we're going to gap way down to this 500 level, and now I'm going to go bargain hunting, you're most likely, you're on the wrong side of probability. You're choosing the 20, 30% probability scenario and hoping that it bounces from here rather than going with the 70, 80% scenario and move in the direction of continued lower prices. Low prices can always get lower. That's the feeling inside of an auction. Not low prices are a bargain. So, and same thing on the way up. Just because the price is way high, it doesn't mean that it's expensive. High prices could always go higher. In fact, that is the normal case. That's why we talk about things like momentum in a market. If it's moving up, it's very likely to keep on moving higher. That's why professionals look at things like a 90-day high or a 52-week high, and is this bullish or bearish? If I make a 1-year high, the highest price in a year, that's a bullish sentiment. Professionals are looking to buy that. They're not looking to sell that. They're like, oh my God, prices haven't been this high for a year. That's super expensive. Let me short it. No, professional traders are buying it. So momentum, prices can always go higher. So don't go bargain hunting today just because we have these giant gap downs. Don't be like, oh, we're going to fill these gaps. Maybe Meta will fill its gap. But right now, if you take that viewpoint that Meta is going to fill its gap, you're taking a gamble. We have no idea. 50-50. Okay, so that's a gamble. I don't know. I don't know what it's going to do. After we give it a couple of days of trading, it may establish a range and then break out of that range. Now that's a different story. If I wonder, like Netflix. Okay, it gapped down. It's establishing a range right now. What range did it establish? It established mostly this range. Okay. So for as long in the next few weeks, if we just chop this way, it's still 50-50 as to whether or not that gap is going to fill. Not sure. No idea. Okay. If it breaks above that range, okay, now I have a probability, not a random chance, not 50-50. If I break above this, now I can say, okay, now I have a 60-70% chance that I'm going to fill this gap. That's how a professional trades. They're not going to say, oh my gosh, look, Meta is going to open right down here. Let me buy it. Well, what would have happened if you did that with Netflix? You'd be hanging on to a big fat loser right now for the past 4 days. Just because it comes down doesn't mean it's going to bounce up, or at least not anytime soon. Your probabilities are 50-50. And so Meta, just because it opens right here, it could do what Netflix did, trade down and then chop around, chop around, chop around. How long are you going to hang on to that, waiting for that gap to fill? You have to take that range, just like on Netflix, and say, hey, well, if it trades above here, then maybe I have a gap fill. And not only that, if it trades above here, it's looking like it will have traded above the EMA 8. So now that gives me good feelings that I could at least go to the EMA 20 or the MA 50, which is where we broke down from. Now you've got a high probability trade. If you say right here, I'm gonna go and we chop and chop, what if it hits the EMA 8 and breaks down? So you have a complete gamble right there. So no bargain hunting today. We're going to at least watch for the first hour to see how these markets trade. And we want to see this 500 level defended. And then this 502 is a more minor one. This is actually more, this could be considered a region. We want to see, do we bounce? If we bounce, can we get to 505 and hang out there? That's probably the best we could expect for a single day. If we don't, do we break? And if we break, does this 495 hold, or is there just panic and we just keep going down? So we want to be very careful today. If we were able to get into short positions like I was suggesting and trying to get into in my portfolios, then you're probably very happy today because just overnight you're already seeing major gains. And then throughout this session, we could see even more gains. Well, as I said, because of the impact of negative sentiment because of Meta and the fundamentally negative bull or bearishness in the market because of the GDP, the more likely direction is down. Even if we bounce up, just say we bounce up to this 502 level, after that, it's more likely that we go down. Or if we bounce up to the 505 level, after that, the more likely movement is downward, not upwards, especially since if we look at technically, we are expecting to continue to move down below this MA90 and most likely below this low that was established here. And that would complete our first leg of a downtrend, which would be a lower low, okay, lower low or lower low, okay, and then we have a lower high, and then we would establish the fact that indeed we are going to have another lower low. Then we have a complete downtrend. So far, we're incomplete. We're down, up. Now we need to, and we're after the gap down at the open, we're coming back down, but we haven't established a lower low yet. Once we establish the fact that yes, we are going to have a lower low for sure, then now we've completed this downtrend, and then we go, okay, we're most likely going to continue and hit this -10 correction level. So no gambles, keep your head on straight, don't get freaked out, don't panic, don't bargain hunt. This is a mostly wait and see day, wait to get into good positions or enjoy the fact that you're already in a good position. Things that I might look for, though, is things that we expected to fall down that haven't quite fallen down yet. And one example over the last few days was ZTS. So we were expecting this. You can see where I drew the lines, where we're expecting this to hit that EMA 8 and come down. Well, it hasn't done that yet. And in the pre-market, look at that. Where is it going to open up? It looks like it's going to open right at that EMA 8. So if I was trading during the day, in fact, me personally, in my personal accounts, I'm going to be shorting ZTS today, right at that EMA 8, and see if it follows the market and continues downward. There's no guarantee. One could say, wow, ZTS is so strong relative to the market today. It didn't fall. In fact, it's a tiny bit up at the pre-market. And so at the open, if it's up, then it's relatively very strong to the market. And so why would I go short that? That would be a completely valid viewpoint. My viewpoint is we are expecting it to go down. We are opening right at resistance. The market is exhibiting a huge downward force. So I'm going to take the direction that ZTS is probably going to follow and enter a put in ZTS this morning. And so those are, again, two competing viewpoints, both completely valid, and you would be a professional making that argument that no one could say, well, you're wrong. It's actually, you might be right. And I agree with your viewpoint, but I'm putting my money on the opposite viewpoint because it's equally as valid and, in my opinion, has a higher probability. So that's the way to think about that. It could go wrong, in which case you should establish where you're going to be out. In my case, I put it right here on this red line right here. And then this is my minimum gain. I'm not going to be out necessarily just because we hit these lows that we've established. If there's a lot of momentum to the downside, I'm going to keep on hanging on to it and just ride it into earnings. Okay? So these are the types of opportunities that are available to us right now because of the market dynamics. And if you learn to spot these opportunities like this, and you're on the right side of probability, not every single one of them is going to work out. But when they do work out, if this, for example, let's just say this works out like this, and now, but the ones that I lose, they only lose this much. Now I've got really high reward to risk ratios. Even if I have 50-50 chance, then my rewards are going to outweigh my losses over a number of trades. So as long as I get enough trades in there, then over time, I'm going to make a lot more money than I lose. And net, I'll make a lot of money. So be careful. Don't bargain hunt. Look for high probability setups like this where you're at resistance and expecting the market to pull it down because it's at resistance. It can't get above that resistance. I'm not going to do it right at the open. Right? So, like I said, I'm going to watch the market for an hour. And unless this starts to make a strong move during that hour downwards, I'm going to wait to see how well that EMA 8 gets defended. And then after an hour, I'll decide. So again, unless it moves right away. So just watch out for everything in the market today. A lot of volatility at the open, and then and just don't bargain hunt. Don't take this as an opportunity to quote unquote buy cheap stocks, buy cheap options. It's just no such thing. We should eliminate that type of thinking when you're thinking about the markets, because that is a consumer mindset. And if you're going to be in the markets, you got to be an investor, not a consumer. All right, guys, we're just a few minutes away from the open, so I'll leave it there, and I will see you in the aftermarket session.